All right, welcome back. Today, we are digging into something pretty special. Caledonia Mining's jaw-dropping Q2 2025 results. I mean, this was a quarter that didn't just beat expectations, it absolutely smashed them. It's completely reset the story for this company. So, let's unpack exactly how they pulled this off.
Okay, let's not bury the lead. Here is the number that had everyone talking, a 147% plus jump in net profit year over year. I mean, wow. This wasn't just a good quarter. Analysts are calling it the company's best ever quarter financially, hands down. So, the question we're all asking is, how on earth did they do it? And to prove this wasn't just some flash in the pan, take a look at this. This is how they've performed against their peers. Over the past year, Caledonia stock didn't just beat the junior miners index. It more than doubled its performance. So you can see, this isn't about getting lucky for 3 months. No, this is a real pattern of outperformance.
All right, let's get into the nitty-gritty. Section 1, we're going to look at the financials behind that massive headline number.
You know, what's so impressive here is that it's not just one number. Look at this, it's strength everywhere. Revenue up a solid 30% to $65 million, which, by the way, beat what the analysts were expecting. Gross profit, that shot up 48% to a new record. And my favorite metric, operating cash flow, the real cash engine of the business, that was up 47%. All of this led to an adjusted earnings per share that just completely blew past what everyone thought was possible.
Okay, so we've seen the what, those incredible numbers. Now let's talk about the how. How did they do it? For that, we need to go deep underground, inside their gold machine, the blanket mine. The recipe for this success is actually, well, it's pretty straightforward when you break it down into these 3 steps. Step 1, they just mined more rock, plain and simple. Came in 6% above their own plan. Step 2, the rock they mined was richer. It had more gold in it, about 3% better than planned. And step 3, the final kicker. They were more efficient at getting that gold out, hitting a record recovery rate. I mean, when you beat your targets at every single stage of the process, yeah, that's how you get a record-breaking quarter.
Now that term plant recovery might sound a little technical, but it's super important. All it means is, for all the gold you dig up in the ore, what percentage do you actually manage to extract and turn into a gold bar? So hitting a record 94.4% isn't just a number on a page. It's proof of real, tangible improvements in their process. It's a huge win for efficiency.
But this quarter wasn't just about operational muscle, about digging more rock. Nope, there was also a really savvy strategic move that completely changed the game for their finances. And that was the sale of their solar plant. And you really have to hear the CEO, Mark Lairmont, on this one, because he lays it out so clearly. This wasn't some desperate move to raise cash. Far from it. This was the final move in a long game of chess. They built the solar plant because they had to, just to secure reliable power for the mine. But the plan was always to sell it once it was up and running, and then pour that cash back into what they do best, mining gold. And here's the payoff. Just look at the impact of that sale. A year ago, the company was in a net debt position. Fast forward to today, after selling that plant, they've completely flipped the script. They're sitting on a net cash position of over $26 million. That is a massive strategic home run. Okay, but with a story this good, you know there are always going to be some, yeah, but questions. So let's address the 2 elephants in the room head on. Costs are going up, and they operate in Zimbabwe. Look, there's no hiding it, cost went up. All-in sustaining costs rose about 21.5%, but you have to look at why. A big chunk of that was labor, mostly because they were paying out bigger production bonuses. I mean, that's kind of a good problem to have, right? The other piece was just the rising costs of materials. But the key thing is, they're not just sitting back and watching this happen. They're actively managing it. And their power savings actually helped cushion the blow. And then there's the big one, Zimbabwe. For a lot of people, that's a red flag. But what management is saying is that the perception doesn't really match the on-the-ground reality anymore. They're talking about better security, a much more stable currency situation. And check this out. The Fraser Institute, which ranks places for mining investment, has them jumping from near the bottom all the way up to 8th out of 17 African nations. That's a pretty significant shift.
So, a record quarter in the bag and a war chest of cash on the balance sheet.
Where does Caledonia go from here? Let's look at their blueprint for the future.
And this leads to the classic dilemma for any company that's suddenly flush with cash. What do you do with it? Do you put the pedal to the metal on growth, funding huge new projects? Or do you reward your long-term shareholders by paying out dividends? It's the ultimate balancing act.
Well, management has a very, very clear answer to that. The CEO says their number one goal is to minimize dilution. Now, what does that mean? It means they hate the idea of printing a bunch of new shares to pay for things, because that makes every existing share, your share, worth less. He says it's in their DNA. It's a promise to protect the value for the shareholders they already have.
And you can see that DNA reflected in their actual strategy. They're going to tackle their huge growth project, Bilboes, but they're going to do it in smart, bite-sized phases to keep costs down. They're going to keep exploring for the next big discovery, and all the while, they plan to keep building that cash pile up to over $50 million, and, of course, keep paying that dividend. It's growth, but it's smart, careful growth.
So when you put it all together, it's pretty clear. Caledonia just delivered an absolutely incredible quarter, fired on all cylinders by both operational excellence and some really smart strategic moves. They've got the cash, they've got the plan. So the question that leaves us with is this: can their blueprint turn what looks like a gold rush today into a truly golden decade?